Good morning and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be talking about the current market events, what are the key or the top market moving news, where do we expect prices to be headed next, and once we cover these, hopefully everyone will trade from an informed perspective. So I'll be starting with a highlight of the major events that are happening today. Of course, the Bank of England is the key highlight. We will be looking at the top news in Forex as well as in stocks. And once we cover that, hopefully everyone will learn something. So once you join in, kindly say hi on the live comment section. Remember to like and share the video. And hopefully everyone gets to benefit from this. So as always, this session is very educational. It's not a recommendation to trade. It's not investment advice. So you should always do your own due diligence. So good morning, J Squad. Good morning, Marianne. I can see Richie in the house. Good morning, Edward. Thank you guys for joining. I appreciate this. So let's get started right away and jump into the economic calendar. So from what we are looking at in the screen here, this is the economic calendar for Thursday. So we don't have much happening. We already have three economies celebrating banking holidays. So one of them is the Switzerland economy, which is celebrating the Ascension Day. So at the same time, we have the French as well as German banks closed due to the same holiday called the Ascension Day. So a majority of the focus in the markets today is on the Bank of England monetary policy report, the policy summary, the official bank rate votes, the official bank rate, as well as a speech from the Bank of England Governor Bailey at 2:30 p.m. So the interest rate decision at 2 p.m. is expected to be no different than the previous, where the Bank of England is expected to hold interest rates steady at the current level of 5.25%. So this is not the first time that the Bank of England is holding interest rates steady. So in the last three rate decisions, it has basically made the same decision. So after hiking rates at a record pace from around 0.1% all the way to 5.25%, we have seen the Bank of England holding interest rates steady for the last two consecutive meetings. And now on the third time, we expect the Bank of England to keep holding rates at this level. So this is designed to keep monetary policy tight and as a result lead to much lower inflation, which the UK economy seems to be doing a good job. So if we look at the UK inflation rate, you'll notice that it's making much better progress compared to the US. And I'm trying to share this in a second. So the UK, this is services inflation. I want the overall inflation. Yes, this is the overall inflation in the UK. And as you can see, during that period where the Bank of England was hiking interest rates, around 2022-23, it managed to see a peak of 11.1%. And since then, the path has been consistently weakening inflation, which means that the Bank of England is consistently getting closer to its inflation target. So while the US inflation has stagnated above 3%, for the UK, it's more of a progress towards that goal. And from the last 1 year, you can see the progress from 10.1% in the March of last year. We have been seeing this consistent drop. We stagnated with the drop around August, September. Then we got 4.6, 3.9, a hike to 4, and then held at 4. Dropped by a big margin to 3.4%, 3.2 in the previous month, and that this is March this year. And we could be seeing much progress towards the 2% target. It means that the Bank of England could potentially go for rate cuts later in the year. So that's what a lot of investors are focusing on this week. And with this happening here and rates holding at this level, there's a good chance that investors will be betting on that rate cut. So as for now, the focus for the announcement at 2 p.m. Will be in the number of votes. Remember, in the last reading, there was a flip of the MPC bank votes. So if you've been following these, you know that in the last reading, we had one member going for a rate hike, two members going for holding interest rates. 8 members going for holding. Sorry, this doesn't make sense. So there are 9 members. They had 1 member going for a rate hike, 2 members going for a rate cut, and of course the remaining 6, which one going for holding interest rates steady. Then in the following meeting, there was a big shift where now we had 8 members going for holding interest rates steady, and 1 member going for a rate cut. So now we are expecting the full consensus where all the members vote for holding interest rates at the current level of 5.25%. So that will be a key focus of the meeting today. So we'll be following more on that. Then, of course, after that, we now focus on the speech by the Bank of England Governor Bailey, and this will be at 2:30 p.m. So the speech will be more focused on oncoming monetary policy. So in this case, investors will be looking for hints that the Bank of England may go for rate cuts earlier in the year. So if the Bank of England Governor Bailey basically decides that there is a good chance that the Bank of England cuts interest rates early, then that would mean a weakening pound. And that's the real focus for the day. So we'll be following closely at 2:30 p.m. to see if there's hints of early rate cuts. And once we get these, then that should be a signal to go for a weaker pound. So on the other side, if the Bank of England governor says that interest rates might have to stay higher for longer, similar to what we saw with the Fed, then in that case, we should be expecting to see a much stronger pound against other currencies. So still in other news for the rest of the day, we'll be having the weekly unemployment claims from the US at 3:30 p.m. Natural gas storage data at 5:30 p.m. That is US natural gas storage. Then a couple of speeches, one from Bank of Canada Governor Macklem, Monetary Policy Committee member Peel for the UK at 7:15 p.m. We'll have the 30-year bond auction in the US at 8 p.m. And of course, FOMC member Daly will be speaking at 9 p.m. So the key event to focus on for the day is the speech, the interest rate decision, the speech from Bank of England Governor Bailey, the unemployment claims. Of course, there's a Bank of Canada Financial System Review, but the more focus will be on the speech by Bank of Canada Governor Macklem at 6 p.m. So that's the key highlights for the day from the economic calendar side. But then we have more news coming up in other market areas. So one of the key highlights, Intel and Qualcomm say exports to China blocked as Beijing objects. So Intel said on Wednesday that its sales would take a hit after the US revoked some of the chip makers' export licenses for a customer in China in a move Beijing complained was going too far in the name of national security. So in this case, the US continues implementing sanctions against China in terms of access to the semiconductor products from the US and overall the West. So in this case, we expect the two companies to be experiencing volatility data in the day. That is Intel as well as Qualcomm, which have been making major sales to China. So we also have this new development with Huawei, though it's not a publicly traded company. Its new phone uses more China-made parts as well as a memory chip. So what this means is that all the parts and memory chips that it was getting from the US if it's now able to buy those products from China, then there's US companies that are about to take a hit. So Huawei's latest high-end phone features more Chinese suppliers, including a new flash memory storage chip and an improved chip processor, a teardown analysis showed, pointing to the progress China is making towards technology self-sufficiency. So online tech repair company iFixit and consultancy TechSearch International examined the inside of Huawei Technologies plus 70 Pro for routers, finding an NAND memory chip. They said was likely packaged by the Chinese telecoms equipment makers in-house chip unit, HiSilicon, and several other components made by Chinese suppliers. This is going to affect several companies in the US that were previously supplying Huawei with parts. So on more news, we have China's exports and imports return to growth, signaling demand recovery. So as we have always said, China is the biggest importer of oil in the world. And when China's economy is doing well, especially in manufacturing, imports, exports, we tend to see oil responding positively to Chinese demand. So China's April exports meet forecast, imports handle top expectations. Trade upturn suggests welcome demand recovery at home and abroad, but analysts are skeptical about strength of both exports and import growth. China's industrial overcapacity, problematic for factories, they say. China's exports and imports returned to growth in April after contracting in the previous month, signaling an encouraging improvement in demand at home and overseas as Beijing navigates numerous challenges in an effort to show up a shaky economy. So more on that to be covered later, but as I mentioned, Chinese industrial recovery tends to be positive for oil, and we have already seen oil responding positively this morning. So more on the Bank of England. Bank of England is likely to move closer to the first rate cut since 2020. So, of course, the overall consensus is that the Bank of England holds rates steady at 5.25%. Investors will be watching for hints for a rate cut in June. So ECB expected to move next month, Fed going more slowly. UK inflation heading for 2% target, but wage growth is strong. So the Bank of England is likely to take another step towards its first interest rate cut in 4 years on Thursday as inflation falls, but will probably be cautious about signaling that a move is imminent. The central bank is already expected to keep its benchmark bank rate on hold for a sixth meeting in a row at 5.25%, the highest since 2008 after its May monetary policy discussions. So the big question for investors is whether the Bank of England suggests that a cut could come in June when the European Central Bank has already signaled it will reduce borrowing costs, or like the US Federal Reserve holds out for longer. So we are seeing potential shift in monetary policy between the three major central banks, where investors are expecting that the Fed will be holding rates higher for longer. They're also expecting that the European Central Bank will go for early rate cuts, maybe next month, and then for the UK to potentially indicate a June rate cut, and that should be happening at the meeting later in the day today. So other key highlights in the markets include a speech by FOMC member Collins. He becomes the latest Fed official, and rates will likely stay higher for longer. So we are seeing this happening across board. So Boston Fed President Susan Collins said on Wednesday that it will take longer than previously thought to bring down inflation, becoming the latest policymaker to make it clear that rates may need to stay at their current levels. So the recent data led me to believe this will take more time than previously thought. Collins said in a speech at the Sloan School of Management at the Massachusetts Institute of Technology, MIT. So there's no preset path for policy. So Collins believes that improvements in supply chains that helped cool inflation quickly last year may not continue this year, and that slow economic growth will be needed to bring down demand and therefore inflation. Still, she remains optimistic that inflation can be brought back to the Fed's goal of 2% in a reasonable amount of time and with a job market that remains healthy. So other officials this week have also shown they favor holding rates at the current levels for longer. So from the New York Fed President, John Williams, who said on Monday that policy is in a very good place now and we have time to collect more, so steady as she goes. So from Minneapolis Fed President Neil Kashkari on Tuesday, he believes rates will likely need to be held at current levels for an extended period, but also didn't rule out a rate hike if inflation stalls near 3%. So this basically shows various Fed members are likely being positive about holding interest rates at the current level of between 5.25% and 5.0%. And this is a 23-year high. And now that inflation is not behaving as expected, they might continue holding higher or even potentially consider a rate hike before inflation gets to the 2% target. So among other highlights, there is more volatility expected from Airbnb shares. So Airbnb forecasts a weaker Q2 revenue despite robust demand for international travel. So Airbnb reported a higher quarterly profit on Wednesday, but forecast second quarter revenue below Wall Street expectations, selling shares of the vacation rental company down 80% early on Thursday. So we're expecting the stock opening down 8%. So accommodation companies in the first quarter have seen demand for travel in regions outside of North America boost earnings, as travel rates in Asia Pacific as well as Latin America. So Airbnb's first quarter revenue rose 18% year over year to $2.14 billion. However, the company forecast second quarter revenue between 2.68 and 2.74 billion, which was below the analyst estimates of 2.74 billion, due in part to currency exchange rates and the timing of the Easter holiday. So, as we approach the end of the highlights in the markets, we will also be looking at technical analysis. So if you have any questions, feel free to type them in the right comment section and I'll be responding to that as we approach the end. So stocks stirred water as traders look to Bank of England decision, markets wrap. So this is just a highlight of the top news in the market. Microsoft's ex-boss is planning more cuts after studio closings. Americans are racking up phantom debt that Wall Street can't track. Stormy Daniels will return to court in test of Trump's demeanor, and Trump judge indefinitely postpones documents case trial. So trying to find the key highlight events. So UK Bank of England decision, initial jobless claims, UK industrial production. This is GDP tomorrow on Friday. ECB publishes account of April policy meeting. This will still be tomorrow. Bank of England chief economist Hal Peel speaks on Friday, and US University of Michigan Consumer Sentiment Survey on Friday. Chicago Fed President Austin Goolsbee will also be speaking on Friday. So main moves in the markets, Euro stocks 600 was little changed, SP 500 down, Nasdaq slightly down. Futures on the Dow Jones Industrial Index slightly down, and the MSCI Asia Pacific Index also slightly down. So we don't have any major movements happening in the markets. Also, Bitcoin and Ethereum also moving downwards, whereas the yield on the US 10-year treasuries retro change is still at around 4.5%. So that being said, I believe that was the key highlight for the day. So now we know all the major news that you're expecting for the day. And the next part of the presentation will be focusing on the technical analysis to try and understand where the markets might be headed next. So yes, I'm seeing there's quite a number of good comments. I'll be checking on them. Hello, Peter Njogu. Hello, Ernest Shayo. Hello, Venesis. Nancy Nyagodi. Thank you for joining the session. Is it possible you do long-term outlook on pairs as opposed to only short-term view, like weekly analysis? That's a good proposal. Hello, Manthi. Hello, Miriokaka. Hello, Apollo. So let's get into technical analysis. And hello, Waridi, for joining the session. So on the technical analysis side, we jump right into trying to understand the underlying market trends. And once we cover that, then we approach the end of the session. So first things first, let's start with the dollar index. So after last week's surprise weakness in the dollar index, this was following the FOMC press conference. We had a big drop down, especially on that is during the FOMC press conference, and of course after the non-farm payrolls on Friday. But then immediately after that, we saw the dollar index beginning to recover. So the dollar index has recovered a majority of that move, as we can all see. And this is more than 50% recovery, and I expect this recovery to continue. As you have seen, a lot more Fed members are projecting that rates might stay higher for longer, which basically implies that the dollar is expected to be strengthening over the short run. So in the next 3 months, we should be seeing the dollar index remain strong against other currencies. And this is a good bet, especially when you're trading against weaker currencies. So what we have seen in the USD JPY currency pair is that there was an intervention 2 weeks ago, followed by another intervention last week. And then now we are seeing the market making a recovery and moving towards the previous highs. So anything you try to associate this with doesn't add up. For instance, if you look at the high and the previous high, you notice that the market found resistance there, but then has continued to move upwards as speculators continue betting against the Bank of Japan. So at some point, we should be expecting to see some further intervention. The Bank of Japan obviously will not tolerate the yen continuing to lose against the dollar. So most probably it will be looking to intervene at price levels maybe above this area, with the extreme highs being at around 160. So we saw the big decision happening at 160, but the other decision was slightly lower. So the first intervention happened when the USD JPY hit 160. Second intervention was around 157.9. You can see the big move downwards here. And now the market is moving higher. And if the Bank of Japan waits for the currency to get back to 157 and 160, then these two moves will have been wasted. So if they plan on continuing to push the yen to be stronger than the dollar, then they have to intervene at even much lower prices. And potentially, we could be seeing it happening at 156,258. So if you have any bullish positions, make sure that you're operating with tight stops so that in case of an intervention, you don't get caught in the fire. So this is a likely candidate for an area where the Bank of Japan could consider supporting the yen yet again. So for Euro USD, we saw this bounce happening. So it happened the first time, second, and at that time. And then eventually, we have seen the euro continue to slide against the dollar. And now, having followed this trend line for a while, we know there is a likelihood that we continue seeing an extended weakness in the euro against the dollar, with a target being at last week's low of 1.0615. And of course, this other area as a new target, perhaps for the next 1 or 2 weeks. So for now, I expect the euro to continue sliding to the dollar. So for pound USD, where we are expecting a decision, in this case, we expected a potential break. And if the break fails, then the market to move downwards, which actually happened. So this trend has been holding for a while. So just want to remove all this so that we can focus on the current price level. So this trend line has been holding on quite well for pound USD. And now after the market hit this resistance on the same trend line, you can see the big bounce downwards. And now we are testing a key level support. So the key level support, or what might look like the uh, focus point for the day, will be 1.24673. I would think that as a neutral area. And if we have news supporting a strength of the pound, maybe it stay higher for longer in the UK, then we could be seeing the market retesting this trend line here. So on the other hand, if we have a hyper aggressive Bank of England, then we could be seeing the pound weakening against the dollar and dropping all the way to 1.23064. But of course, if it's a more neutral, then a small move downwards to 1.24181. So we'll be looking at how the market reacts to the news from the Bank of England interest rate decision, as well as the speech from Governor Bailey before looking for positions in pound USD. So USD CAD also bounced pretty well, broke this resistance, pulled back, retested, and now we are seeing a continuation. So for the day, at least, I expect an intraday movement that retests yesterday's high. Then we have New Zealand USD. So of course, we've had all this volatility. If we go to the forward chart, we've had this trend line which was broken last week. Then the market pulled back downwards, and now that we are seeing a strong dollar, there's a good likelihood that we continue seeing the dollar strengthening further against the New Zealand dollar. So in this case, it's a market trading within a flag. So for those who understand the flag formation, this is the movement here. If you go to the 15 minutes chart, you get a pretty good view of how the flag is shaped. So that's our flag formation here. And now with a strengthening dollar, a potential drop and perhaps a breakout on the lower side. So in this case, I expect something similar to this. So a potential drop towards the lower trend line and a potential break towards the lower side of the flag. So that's how it looks on the 1 hour chart. Then for USD against the Swiss franc, we were expecting the market to go for a retest here. But then the retest was much shorter than anticipated, and then the market started strengthening. So we have faced a very strong resistance around this area here. So notice the previous times the market faced a very strong support and now turned into a resistance. But now the market is looking to break that area. So in this case, there's this expectation. The market finds a very strong rally from this point and heads all the way up to 0.91511. So a price action that sees the dollar strengthening against the Swiss franc and eventually gets to 0.91511. So as for gold, we have been seeing the market trading in this wedge. This is a triangle where both trend lines are facing the same direction. They are both bearish. So we refer to that as a wedge. So we had a breakout here, and we were expecting the market to go for either of two targets. So the first target here after the breakout was the previous high here, so around 23.27. And if we broke that area, then the next target would be 23.52. So that didn't materialize on the back of a very strong dollar. And as a result, we are seeing gold taking some steps backwards. And this is resulting in a sideways pattern. So now what we have is an oscillating gold. And this is the overall movement that we are seeing here. So from here, we can see that gold is just moving sideways. So we don't have much volatility. But then at some point, we should be expecting to see a breakout. So personally, I would be more concerned with the potential breakout, just watching patiently and waiting to what side of the breakout the market takes. So as for US equities, we speculated that the market would make a recovery and eventually get towards the upper side. So the recovery has continued, and this week has been more than gracious. And we are almost getting to our target of 39,220. So I expect some further push upwards towards that area. So the Nasdaq hasn't been particularly doing really well, especially if you look at Tuesday, Wednesday. So an attempt to go up, further down, an attempt to go down, further back upwards. So it's looking more likely as a sideways momentum. So Tuesday, Wednesday, yes, there are these attempts for the price to go higher or lower, but then it's more of a sideways momentum. So if I was to remove everything in this chart, then zoom out, then this is what we have. So a majority of this price action is somewhere around this area here. And it doesn't imply at all that the market is moving higher or lower. It's just attempts to go up, followed by recovery, attempts to go down, followed by recovery, attempts to go up, followed by recovery, and overall a sideways price action movement. The overall price action can be summarized and we say it's following this arrow. So it's a period where the market is consolidating, so we don't have much of a signal. But then the 4-hour chart is showing that the market is finding a strong resistance at this area. So if you notice that this trend line is cutting across this area here, then you start realizing that it's a major level resistance. And from this resistance, we could be seeing the equities pulling back downwards. So this is happening in the Nasdaq 100 index, which means that there's more likelihood that the price now continues downwards rather than upwards, especially after we approach the end of the earnings season. So we could be seeing the prices dropping and retesting this area of 17,791. So it's a similar thing for the S&P 500. So if you've been following this closely, then you know we have this. And from the daily chart, this is how it looks like. So the S&P 500 had already broken to the upper side. So after breaking, you can see the market pulling back down to this area, bouncing, but still failing to have the momentum to move further upwards. So in this case, there's a good chance that we see the S&P 500 trading back, with the Dow Jones being the strongest among the three. So Brent oil managed to make some good volatility yesterday with a big drop downwards. We had a pin bar formation. For those who are not familiar with the pin bar, this is the candlestick. It's very popular, especially for reversal pattern traders. So after we got the green candlestick with a long tail towards the lower side, the market bounced strongly and rallied up, go to the upper trend line, attempted to get back downwards, but eventually broke at midnight. And now what we are seeing is further upside momentum, implying that the price of Brent could be making a strong comeback today as well as tomorrow. Of course, now we target based on our price action patterns is based on the previous bottom here. So now it becomes a target. So the expectation is that Brent rallies from 83.9 to $85.249 per barrel. So this is our expectations. Bitcoin is still weak and moving downwards. And of course, we have the Euro 50, the French 40 index all finding resistance, and Asian equities, the Hang Seng 50 or the Hong Kong 50, are making a strong recovery. So we could be seeing a new high happening later in the day or tomorrow. And the China A50 index also making a recovery. So we could be seeing the market pushing for a new high later today or even tomorrow. So that's it for the day. Thank you very much, guys. And now I'll be checking on any questions. So yes, thank you. This is Brian for confirming. Yes, I'm having a problem with my MT5 servers. I'll be checking with the team to see what's happening so I can make further communication. So I'm just checking my messages and I've got a response. We're experiencing a downtime with our system. We're having the server downtime. If you're having, this is really bad, it doesn't instill confidence at all, but tech is tech. Sometimes we'll have these problems. So if you are trying to close an order or execute an order, please just email it to support@fxpesa.com so that you can get assistance. So I know it's a pretty challenging time. Just send an email to that email address I've sent you in the comment section, and hopefully you'll get the support you need. So don't panic. When there's a downtime, it's very difficult to interact with the server. So a lot of information might not be what you're used to. So it takes a little time to get things updated. So as I've mentioned, just go to the FXPesa, go to your email and send an email to support@fxpesa.com with your query, whether it's an order that you're trying to cross at a specified price level. So whatever decision you're trying to make now, it's better sent as an email rather than trying to implement on the platform when the platform is not working. So I believe it's something that will be handled in the short term. So I'll be considering the longer term view, which is something I've been trying to do with fundamental analysis, but with technical analysis, I try to do a shorter term because the majority of our traders are technical day traders or swing traders who will hold for just a few days. So a good comment from Apollo. Thank you for the nice thread on X about order book. As you mentioned, many traders don't know of it, which is true. Where can they learn or even access it? Is it publicly available? The forex market is decentralized. It doesn't have a central or a centralized order book. But then if you're trading other markets such as futures, for futures, you might want to consider looking at the commitment of traders report. And for other markets, they have their own order books. So there's various platforms that provide order book data. You might have to research that. So Allsport TV, that's the username. Hi Rufus, the Bank of England will most definitely hold interest rates. Will this be like the case of Reserve Bank of Australia? I mean, has the market already factored it in? And what is the expected performance of the GBP? Yes, of course, the market has already factored this in. Of course, factoring it in basically means that the interest rate stays high and the pound is really strong. But then the follow-up meeting is the most important one. So we focus on the speech from Bank of England Governor Bailey. That's where the real soup or the real juice is. So hello, Griff Aruda. So it's clear that the JPY is still weakening against other currencies. Are we staring at a possible intervention by the BOJ again? I would expect it to weaken further against the pound, especially today. So yes, we are staring at another potential Bank of Japan intervention. Remember what I said is that once the Bank of Japan starts intervening, they will still keep doing it until they achieve their goals. And in this case, they are not yet achieving their goals because the market seems to be coming right back to the levels that are very undesired for the Bank of Japan and Ministry of Finance in Japan. So apart from Bank of Japan, other central bank interest actions, monetary policy statements and speeches are all signed. Is in then technicals more important than the news like we know GU will sell? We don't know this yet, so we are waiting for the speech from BOE Governor Bailey. I don't think they are currently signed. If you listened to Jerome Powell last week, he acknowledged that some central banks may move ahead of the US, and this would create monetary policy divergence. So this is very well expected in the markets that there will be divergences between central banks later in the year. So morning Waridi, morning Kadosh, Ikejak, Greg Gazla. This is Brian. Morning everyone. Morning Michi Mimo. So that's the last question. I'm getting official communication that the MT4, MT5 servers are back up. Now you should be able to process all your orders as usual. So normal service has been resumed. Thank God. So thank you everyone. Thank you for your time, and remember to like the video, share the video, subscribe to the channel so that you can get updates whenever we have new sessions. So thank you very much, guys. Thank you for your time. Hope to see you then.